In a world where money never sleeps, a market exists that runs 24 hours a day, 5 days a week. A market larger than the stock exchange, more liquid than gold, and more global than any business on earth. This is the foreign exchange market, better known as Forex, where currencies are bought, sold, and traded in real time. If you've ever exchanged dollars for euros or pounds for yen, you've already taken your first step into the world of Forex. But what really happens behind those trades? And how can ordinary people, not just banks, profit from it? Welcome to your complete introduction to Forex trading. What is Forex trading? Forex trading, or foreign exchange trading, is the process of buying one currency while simultaneously selling another. Currencies are always traded in pairs. For example, the EUR/USD, which represents the euro against the US dollar. When you see EUR/USD equals 1.10, it means 1 euro equals 1.10 US dollars. Traders speculate on whether the euro will rise or fall against the dollar, and they profit from those movements. The Forex market is the largest financial market in the world, with a daily trading volume of over 7 trillion US dollars. That's more money exchanged in one day than the New York Stock Exchange handles in an entire month. How the Forex market works. Unlike stock markets, Forex has no physical location. It's a global decentralized market, meaning trading happens electronically 24 hours a day across financial centers like London, New York, Tokyo, and Sydney. Trading sessions overlap. For example, when London and New York are open at the same time, volatility and trading opportunities increase. That's why the London-New York overlap, around 1 p.m. to 5 p.m. GMT, is considered the best time to trade. In Forex, prices change constantly because of supply and demand, affected by global events, politics, interest rates, and economic data. Key participants in the Forex market. The Forex market involves different players, each with their own role. At the top are central banks. They influence currency value through monetary policies. Then we have commercial banks, hedge funds, corporations, and retail traders like you and me. Thanks to technology, the market has opened up to individuals who can now trade using Forex brokers and online platforms from anywhere in the world. These brokers act as the bridge between traders and the global market, providing access to currency pairs, leverage, and analytical tools. Important Forex concepts. To understand Forex, let's simplify some key terms. PIP. A PIP is the smallest price movement in a currency pair. For example, if EUR/USD moves from 1.1000 to 1.1001, that's 1 PIP. Lot. A lot is the standard trade size. One standard lot equals 100,000 units of the base currency. Leverage. Leverage allows traders to control large positions with smaller amounts of money. For example, with 1 to 100 leverage, $100 can control $10,000 worth of currency. But remember, leverage increases both potential profits and potential losses. Spread. The difference between the buy-ask and sell-bid price. Brokers earn from this small difference. Why trade Forex? Forex offers high liquidity, meaning you can buy or sell instantly at almost any time. It also provides flexibility. Trading is possible 24 hours a day, allowing people to trade part-time or full-time. Unlike the stock market, you can profit whether prices go up or down. If you believe a currency will rise, you buy. If you believe it will fall, you sell, a process known as short selling. This unique flexibility makes Forex appealing to both beginners and professionals. Risks and realities. However, Forex trading is not a guaranteed path to riches. The same leverage that can multiply your gains can also magnify your losses. Emotions like greed and fear often lead traders to make poor decisions. That's why successful traders rely on discipline, risk management, and continuous learning, not luck. Always trade with money you can afford to lose and focus on education before execution. How to start trading? Forex to begin, you'll need 1. A trusted Forex broker, regulated and transparent. 2. A trading platform like MetaTrader 4 or 5. 3. A demo account to practice risk-free with virtual money. 4. A clear trading strategy based on analysis, not emotion. Learn to read charts, understand news, and practice risk control. Knowledge and consistency are the keys to long-term success. Forex trading is a vast and dynamic market that connects the entire world through currency exchange. It offers freedom, opportunity, and challenge, but it demands knowledge, patience, and discipline. This is just the beginning of your Forex journey. The deeper you learn, the more the market reveals its potential. Welcome to the world of Forex trading, where understanding the movement of money can shape your financial future.